Hello and welcome to GoodGood Investing. I'm Rachel Grunn.
And I'm Andrea Cwik.
How are you doing today, Andrea?
I'm doing well, thank you. I got a
School
good
just
night's,
started.
yes, I was gonna say I got a good night's sleep and school started. However, the germs are back in town. With school starting, it's like, oh man, we were so healthy during the summer and now everyone's sick and coughing. So yeah, that came pretty quick.
And this is also why we're recording in separate areas. We just want to be super safe. I'm leaving for Europe next week, which will be so fun. But that means that I'm quarantining myself because the worst thing is getting super sick before like an international travel day. I just can't even imagine.
No,
That
I
sounds
did
horrible.
not want that for you. And whatever, excuse me, whatever is going around in our house, it is harsh. And somehow I have been able to not get sick even when my kids are on top of me coughing on me. And
That's
even
amazing.
my husband got sick. I'm like, oh my goodness, please, body, stay, stay okay. But yeah, it
Oh,
sounds
good. Well, I'm
bad.
glad you're not sick right now. Gosh,
Yeah.
something
No,
about being
and then
sick in the summer. It's like you don't want hot soups. You don't want like all the comforts that you have getting sick in the winter. It's just miserable.
and can I just tell you, this summer was like the hottest summer in Texas ever. And we didn't even go outside. We lived our life indoors. But I've heard that I should go outside now because I've heard that the weather is a little bit better. So I need to go and see for myself.
It's 97 versus 107. Yeah, I don't know about about better, but it's definitely a little bit chillier. A little bit chillier. So today we are going to be talking about stocks versus syndication. I don't know that we've ever dedicated a whole episode to this. We briefly mentioned like the differences in the past, but yeah, we kind of want to break it down because I feel like a lot of investors that are getting started out are really comfortable with the stock market, and the idea of an alternative investment, even if it could do a lot better than the stock market, is still super scary. So I think we should just break it down by the numbers, right?
Yeah, and I get this question a lot because, coming from Silicon Valley, I mean, our whole retirement plan with my husband and I was keep giving into our 401k, which, is in the stock market, and we will retire eventually at 65 from whatever stocks we have, and we'll, finally cash it out and all of that. So that's where our mind was. And people always ask me, how did you make that mental leap from being all in the stock market to real estate investing? And I always answer this question by saying it was scary. Okay. Probably like one of the most scariest things we've done because it's going from, even though, like, when you really think about it, no one really educated us on putting our money in the stock market. It just was, right? Like, if you think back, um, if you do have a corporate job, that's just the way it was. Like, they just tell you, you put in money in your 401k for retirement. There is no other alternative. So when you have that mindset and that's what you think is the norm, you don't question it. So then you're working your job years and years and years, and now you have this huge nest egg of 401k, and you might have seen losses throughout the years, but that's what you know, and that's what you've gotten used to. So now taking the leap into something different takes a lot of mindset shift. And so one of the books that really helped us was Rich Dad Poor Dad. And after we read that, we kind of started thinking about things a little bit more critically when it came to our retirement plan and cash flow, and so we had to kind of reframe things in our mind to, what, this is what we've been taught, but can we put our future in our own hands and start learning how to make our money work for us? And when you start thinking about that, then I think there's an easier leap from stock market to syndication.
Yeah, the Purple book, the Rich Dad Poor Dad book, was the genesis for a lot of people in the syndication space. And he doesn't even really single out syndication. He's just more talking about, like you said, having your money work for you while you're sleeping. If you're not like a book person, I do recommend the audiobook is pretty palatable. Or they have a summary book where it's just bulleted points of everything that he talks about, and it's super short. Or they even have a kids version if your kid is like maybe 12 and you want to teach your children about passive income and things like that. So definitely check out the Purple book for mindset shifting. And then just breaking it down by the numbers. I mean, if you're looking at the average stock market return, I think it's something at 7% right now annually. I haven't looked recently at the S&P 500 or anything like that, but it's not in the double digits, I don't think. And if it is, like maybe 10% max. And I mean, if you're looking at alternative investments like real estate, like a lot of these are projecting 20% annualized returns. Some of them do better, some of them do worse, like 15% annualized. But, even if it matched, in my opinion, even if it matched the stock market, like head for head, say the average return on investment was like 8%, okay, for a syndicate that you were in, and the average return for the stock market is also 8%. Stock market's not backed by a physical asset. So there's so much anxiety for me, at least, putting money into the stock market because anything could happen and my money could be gone in an instant, literally overnight. That does not happen in real estate in the same way because your investment is backed by a physical asset. It's like back when like the dollar was backed by gold, like there is something of value that you have invested in. You're not just investing in an idea, which I feel like the stock market is kind of an idea. So that's also something to consider. And then also there's no tax benefit to investing in the stock market, which you get in real estate. So there's a couple reasons, even if it was neck and neck on return, there's a couple reasons I would still choose real estate over the stock market. But historically, it's done way better anyway.
Yeah, I was gonna say, like, whenever I was choosing to figure out what to do with some capital that we needed to deploy that was sitting in our bank account, I Googled how do rich people become rich or how to become a multimillionaire, and all roads led to real estate investing. So, it's kind of like success leaves clues, right? And
Yeah.
so, if you look at all of the billionaires, multimillionaires of the world, where are they investing? They probably have some in stock, right? But like it truly is shown when I was doing the research that real estate is the way to move the needle. And I just love the fact that one, it's backed by hard assets, and two, that you really can control the speed at which you scale as well. And I've seen way more people retired early from real estate investing than I have from sitting in a 401k in the stock market. So, I mean, for me, it's just been a game changer. I think, we're still targeting 5 years, you know, around 5 years for us to be able to retire. And I just think that that's mind blowing. Like at such an early age to be able to kind of forecast that as an ideal. And I don't think that I would see that in the stock market. And I know I have a lot of friends working in corporate America in their 9 to 5 or, 9 to 9. I mean, it's like just around the clock type working that they're working really hard. They're getting a good paycheck, but when it comes to retirement, they might not be set up as, one would expect, and they have to wait until 65. So, real estate investing is a great thing to look into. And, we're always available if you want to chat. Um, and I would say reach out and, let us know if you have questions.
Yeah, one of the cons, I think one of the biggest objections to not investing in real estate and investing in stocks instead would be the liquidity factor. Stocks are incredibly liquid. If you needed the money tomorrow, you could liquidate, sell some of your shares, and have that money in your bank account. And that's a great sort of net to have underneath you. Like, I get it; it feels nice. Whereas if you're invested in a syndicate, like, you're committed to the entire hold period. Now, I personally see that as a plus because I think it fosters investment accountability. So I stay invested and I don't just want to divest because I want to buy something or want to go on a trip. It kind of defeats the purpose of like being in it for the long haul. And then also, it means that real estate's not as volatile. The idea that 90% of the investors in something can just sell their shares on a dime, and this is why you see panics happen in the market because people start panic selling, and that's when the stock drops. And so you see that happen a lot, and that just does not happen in real estate in the same way. Because in order to sell something in real estate, you need a buyer. In order to sell something in the stock market, you don't need a buyer. You can just sell it immediately. So, yeah, I think honestly it's a plus for me, but I can understand why it would be a hesitation for someone else.
Yeah, I mean, also the other hesitation that I get from people is that, oh, I don't know if I want my money to be locked up for that long. But the thing is, you also have to think in the stock market or in 401k, it is kind of still tied in there because people don't really want to cash out as much because of the tax penalties. And if you're looking at retirement, then are you really going to retire in 4 to 6 years? Probably not, but maybe the idea of tying it up in a syndication is harder to think about. But I would encourage you to look at it from a different lens, which is, are you really going to retire in 4 to 6 years where you could see bigger returns? And of course, we always talk about invest wisely, whatever you're going to invest in, because you want to make sure that you have your reserves for those emergencies, that you have enough liquidity for the emergencies before you invest into anything.
Yep, exactly. One of my friends wanted to invest in something and she said that she couldn't because if she sold her stock, she would actually be losing money because it went down so like 50% or something like that. She lost half of her money. So she was like, I have to stay in because, my financial advisor is telling me I'm playing the long game. And so I have to stay in. Otherwise, I would lose everything. And I was like, that is a horrible position to be in. I just cannot even imagine.
Well, but the thing is, how does she know that that is going to not go down even further and
Exactly.
completely wipe her out?
Exactly. She doesn't. She's just
I,
trusting people that are, experts on the subject, quote unquote. Um,
well, and then when we had capital to deploy, I did interview a few financial advisors. And the return models that, the return projections that they were giving me, I was not even impressed with them. And so that's why I was like, you know what? I'm going to figure this out. I don't want to tie up my money for somebody else to manage. I want it to manage it on my own. And we've definitely seen way greater returns than I ever would have seen under them. I truly believe that.
Man, that's so funny. So one of my friends, I just got lunch with her yesterday, and she used to work for a financial, like an estate planning, like financial advisor, wealth management place, whatever. And she said, and I'm not saying this like dog on financial advisors, like really, they're honest people, and I understand that they're advising with the best of what they know. And actually, one of my good girlfriends is a financial advisor, and she actually is a huge proponent of alternative investments like syndication. So I love her. But she worked for this. My other friend worked for this company, and this woman was like, "I'm going to take out $200,000 because I'm going to invest it in a syndication." This a couple of years ago. And her financial advisor was like, "No, don't do it. It's a scam. Like you're going to lose so much money, blah, 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 blah." And my friend was like, "Yeah, I mean, obviously they were saying that because they're going to lose assets under management." She took it out. She's like, "I don't care. I'm taking it out." Literally 18 months later, she came back and wrote $1 million check to reinvest with a financial advisor off of the money that she made from that syndicate. Granted, this was like during the 2020, 2021 like boom of
Yeah,
syndication. Like
yeah,
stuff
yeah,
was
yeah.
selling in 18 months for like 3x.
9x. I
Yeah, it was
know.
crazy. I mean, it was wild. You don't expect
Yeah.
that to happen again. But it was just like, oh, that must have been so satisfying for her to come back.
Uh,
And, and he was like, oh, well, this would never, this is not normal. This is just a one-off. Whatever, won the lottery. It's just so funny. But yeah, I think for me and my family, we're going to stay out of the market and stay in the housing market instead.
Well, I told you that like I thought that we were completely out of the stock market. Um, we intentionally have like cashed out all of the things and put it into real estate, and that's not for everybody. So, don't do what I do. Do you, right? But then a couple weeks ago, I got a statement that I guess I had overlooked for years, and I found more money in a stock account.
That is
I was
awesome.
like, honey, oh my gosh, we're still in the stock. We're
Hopefully
still
you
in
were
the
in the
stock
red,
market.
not in the black. Or sorry, opposite. Hopefully you were in the black, not in
Yeah.
the red.
You know what? I don't even know what I started with at this point. Our listeners are like, Andrea, what is wrong with you? But no,
Have
I don't
you have you heard about girl math? Have you heard
know.
of this new trend called girl math? So
No,
girl
tell me
math.
all the trends. You're good at the trends. I need to know.
So, I mean, our listeners need to know too. So, girl math is like this new funny trend where they're like, okay, if you pay for something with cash, it's free. If you return something and get that money back, then you can spend that money on something else and it's free. Like this is girl math, right? It's like all the different ways that something can be free. And then there's actually this podcast where people call in and they're like, okay, help me with my girl math. I spent $5,000 on Taylor Swift tickets. Help me make it free in my head. And they would like do this great, it was so funny. So girl math, you found that money in that stock account. You can literally go out and buy a Gucci purse and it'll be free. Girl math. Because you didn't know you had the money to begin with.
Right?
So you could just spend it and it wouldn't change your life. It'd be free. Yeah, girl math.
That is hilarious. No, I do not advocate for girl math. Go and I will be putting that. I don't know. I'm like, we don't necessarily need to cash out for the penalty, but I love real estate so much, so we probably just will also cash that out and move it into real estate so that we can reinvest and then potentially double, triple our money. So
Love it. Do it. Do it. And then you can spend the money once you make it. And then it'll be free.
just
Go on a
like Rich Dad
vacation.
Poor, yes, Robert Kiyosaki, what he says, like, make your assets give you the cash flow so that then you can buy that Gucci purse or go on vacation and do all the things. So we
Yeah.
want to buy things that make us money. And actually, that was mind blowing too. I'm like, oh, I should have bought a smaller house. But
I
like
mean,
a lot of people now, like Grant Cardone, he rents or something like that, I've heard. Like he doesn't even have a house that he pays a mortgage on because he wants to just buy assets that pay him money so that he could then buy whatever he wants. So, yeah, super interesting. But all those that get into real estate investing, I mean, I see their success. And so I definitely am an advocate for the real estate investing lifestyle.
So if this episode has piqued your interest, and certainly if it's your first episode to listen to Good Good Investing, you should go and check us out on our website, goodgoodinvesting.com. You'll find some fun freebies there, but also you'll have a chance to connect with us and join our investor club, which will just keep you in the loop on other things that we have kind of brewing in the pipeline. We do encourage you to schedule a call with us because that's the only way that you will be able to see our future investment opportunities. And then email us with any of your burning questions or, input or all that kind of stuff. We'd love to hear from our listeners.
Yes, and to all of our listeners, we value you, we cherish you. We hope that you're getting a lot of value from, what we talk about. And we just ask that you share this podcast out to your friends and family that would benefit. And also that you leave us a 5 star. I don't even know if there's 5 stars, but leave us all the star reviews because that really helps us get our message out to more people.
Yes, exactly. Well, until next week, everyone, don't invest good.
Invest twice as good.
Bye.
Bye.